Well, it looks like you finally made it. You bit the bullet and decided to join Pat's stock mentorship program. And for that, I thank you. But what's more is that from here on in, your understanding of trading penny stocks and penny stocks in general will now be completely different. And I think you just might like it. I spent a bit of time this morning making myself look as presentable as I could, given that this video will be watched by many people over a long period of time. So if you're disappointed, know that it doesn't get any better. Well, let's get started. If you joined, you probably were curious as to what the steps were, and a friend of mine actually described them as commitments. It's 5 commitments you need to make to yourself every time you decide to enter a stock. And we'll break them down one by one. Another great guy and mentorship program subscriber created a flowchart for us for the steps. And the steps allow you to do a variety of different things. And you can see at each point there's an opportunity for you to stop looking at it because you know it will only become a bag. And a bag, as we know, is holding someone else's shares when you bought too high. Baggy. So let's get started. This might take a while, so I hope you're comfortable. If you got to break it into pieces, that would be fine as well. First things first. Let's pretend you just heard about an exciting opportunity. Hearing Seki. What do I do? How do I know when to buy it? How do I know when to get in? How do I know if it's even real? Well, here's how you do it. Step 1. We are looking for current disclosures on otcmarkets.com. So let's choose Seki. We could see here that the company is delinquent reporting and has limited information. There are 3 levels to a company's reporting status: a stop sign, which is no information; limited, which means that they are out of date slightly. It's a little piece of pizza. Yield sign, on their filing requirements, but they are making filings. And then pink, which means they are current. There are also other levels on the OTC, including QB and QX. Each one of these levels represents a different standard of reporting requirement that OTC Markets requests from any company. So on the QB, the price per share must generally be at a certain level, and the financials must be audited to a certain point. On the QX, the price per share may need to be at a higher level, and the financials are audited by a certain level or type of chartered auditor. These are the levels to the pink sheet stocks on the QB, but all you need to know for now is that pink, QB, and QX here means that the stock is current reporting. And I can see on their disclosures that they are releasing disclosures. So, what is my next step in this case? Well, this leads me to a very, very important discussion that we will have about share structure. But first, let's go back and look at something on the other side of the coin, because this is equally important. So as we work through our flow chart, we have now covered this, and we are moving towards what if there are no disclosures on OTC markets. Thank you, Eric, for making me this lovely flow chart. I love it. Next. There are no disclosures. I've got a new stock now. Bro, buy WGEI. Oh! Well, the first thing I would do is I'd go onto OTCmarkets.com. Let's actually do a different one. Bro, buy IBGR. Well, the first thing I would do is go on to OTCmarkets.com, and I would put in the ticker name, and I would look for disclosures. And I can see that this company is, the date is September 22nd, 2018, and I can see that this company is more than 2 years out of date with their filing requirements. Darn it. Well, how do I know if there's something coming? Here's the good news. You can know. Within each stock, wow, there is a requirement from OTC markets. The requirement is that the state in which the company is domiciled must be receiving tax payments from the company. And they must, at the bare minimum, be filing with the state in which they are domiciled to even receive a consideration to ever put another disclosure up on OTC markets ever again. So the rule is, if a company is not active in their state, the OTC will never let them file anything to get current. So until this is done, this can never come off. I should use the mouse instead of the hand, right? Now, it is what it is. So let's check it out. Let's get back to our flow chart. The flow chart says that we now have to understand, is there a reinstatement or active status on the SOS site for the state of incorporation? Let's find out. When you are using SOS websites, you must search by company name. There is an excellent tool out there if you are interested, and that tool is otcre.com. And if you are becoming a heavy user and you're doing a ton of research, this actually makes it quite a bit easier to find the filings on Secretary of State websites, because not all of the companies are in Nevada. A large percentage are, but not all. The way you can find where the company is domiciled is right on the first step, looking at the ticker on OTC markets and selecting company profile. Through here, it is always in the same spot, incorporated in. So I can see that this organization is incorporated in Nevada, and I can go to the Nevada SOS website and type in the name of the company. Alternatively, I can use OTCRE, and it will search all of the popular SOS websites for OTC and other tickers. Okay, here we are. IBGR, we found it. And it has taken us to a page that shows the actions and amendments. And I can see an annual list this year. An annual list is the minimum reporting that you must do with the state. And that annual list is a list of officers of your company. It's good to see because this would mean that they are active, which is really good news in the case of this stock. The company is active. Now, that's not always the case. Let's find another one, and we'll explain the different levels. Here's another ticker I've found. Coil. Quest Oil Corp. And I see that I have not seen any disclosure from them for almost 10 years. And if I return to the entity details, I can see that it is permanently revoked, which means that the state has taken away their status to do business indefinitely. There's a way to come back, and we'll discuss that now. You've heard a lot about reinstatements. What is a reinstatement? What is the relevance of a reinstatement? A reinstatement is when a company says to the state, hey, we're going to get caught up on our taxes, and we'd like to get active filing with you again. The assumption is that they're doing this so they can once again continue being publicly traded. So our step here is to ensure, like in the case of Nexus Energy Services, that if they were to choose to start filing with OTC markets and start making disclosures available to potential investors, that they would be allowed to by the market. The importance of a reinstatement, which you will find here, and we'll look at one that's relatively recent, is that after a period of darkness, the company has come back to say, we intend to be publicly traded. And in a large majority of the time, over 84%, they move from here to going current on the market. Why is it important? It's important because the longer, and people talk a lot about, I like to buy the bottom. I'm a bottom buyer. You ever heard it? What is it? Well, let's compare some dates. NBDR, the date of its reinstatement was March 8th, 2018. And we can see here that the large move on NBDR began literally the next day. Let's look at another more famous example. Everyone knows this one. A reinstatement on February 14th, 2017. And although it took a bit of patience, it looks as if the run literally started the next day. How about one more? Let's hammer it home. We all know these ones. We all know them. Aldicio. Reinstatement. December 22nd, 2017. The run literally started 4 days later. Market was chilling for a few days for the holidays. The purpose of a reinstatement is that it is most often a commitment, or at least the first step, to once again getting to current reporting status. And with that, the longer the period of darkness, the more confirmed of a bottom price it is. This is the essence and the importance of a reinstatement. Excuse me. So in our steps, let's get a flow chart. Why not? I can't even move it. Nice video. Is there a reinstatement or active status on the SOS site for the state of incorporation? If no, then you take this stock and you throw it in the trash. Whoop! Done. You have now found an exit for a potential bag right here. Great job. Next, let's bring it back. Is there a reinstatement or active status? Then yes. Are there current disclosures on OTC markets? Then yes. Both of these things lead to the next question, and that is the question of share structure. And this will become the bedrock of every thought you have on a stock moving forward, whether it be pennies or not. And we're going to get into a big discussion here, so hold on to your shorts. Awesome. What is share structure and why do I care about it? I like news. Well, the importance of share structure is to allow you the opportunity to understand what your potential for upside is. And in that, we will learn what dilution is. When I started out, I asked 10 people, 10,000 people, what is dilution? I got a different answer every time. And it's actually the easiest thing around. In your Discord that I hope you are using, you will find guides from me, poorly drawn, but useful nonetheless. And it's not very visible here, so maybe I'll draw a new one. So let's try it out. What is dilution? Hey, Pat. Yes? What's dilution? Well, I'm trying to talk about it. Weirdo. What type of course is this? Here we go. GTHP is a company like any other. And they have decided to split their company into 1 billion pieces. There are 1 billion pieces of GTHP just hanging around. The outstanding shares are shares that they have given to various parties, and we'll get into that. And the float, and we don't even have a float here, so why don't we try a different one? This is good. One more time. This is even better. BYOC is in 1.1 billion pieces. And the outstanding shares are shares that have been issued to various people. They're out there. Why are they issuing shares to people? Well, there's a variety of reasons, but the largest reason of all is to service debt. So, once upon a time, my company was split into 1.1 billion pieces and I had no debt. And since then, I've issued 1.013 billion of them to various parties. And those various parties will be selling at their leisure. I issue my shares to these parties to service debt, to run my company. I'm trying to get my company off the ground. I've become publicly traded so that I may raise capital to grow my company. So my issuing these shares is a way for me to pay people and entities that assist me along my way, whether they lend me cash, whether they provide me services, or anything of that nature, who then in turn may sell. Now, why is this important to us? It's important to us because you and I, we do not trade the AS. We do not trade the OS. The float or public float are the shares that are being traded every single day. From me to you, you buy from me, I buy from you. These are the floating shares. These are the shares of the company that are out there in retail, which is you and I, regular people, accounts. So if you haven't closed in on it yet, the only way for these debt holders to capitalize on these shares and receive payment for their services or whatever they've provided to the company. Maybe the CEO is a secret family. Well, the secret family needs to pay the mortgage as well. So how do they get money out of these shares? They sell them to you and I. They sell them to you and I. And as these shares are sold from the outstanding shares, they were not publicly available before, to the float into retail traders, the price per share or the quality per share is now diluted. It's like if humans could only subsist on apples and there were only 1,000 apples on earth, each apple would be worth a hell of a lot, would it not? So if the Earth's float of apples, which is the only thing that humans can survive on, is 1,000, the demand for apples is here. Apple demand. It's very high. Now let's say an alien came from outer space and rained down on Earth another million apples. Then your apple supply would have gone up and apple demand would have gone down. Therefore, by selling shares from the outstanding shares into the float, each share has less value. This is dilution. The value is literally being diluted. But how do I know if a stock is being diluted? Once you see it, you will always know. I'm going to zoom in real close. And I'm going to show you a stock. And you're going to look at it. And we're going to do a lot on charting. Don't you worry about a thing. There's a lot to come. We're just going to take a quick look at what dilution is all about on a chart. And my chart is set to 30-minute candles. Each candle represents 30 minutes of trade in action. Now I'm going to set my candles to 1 day. So each candle represents 1 day in the market. And you can see that at the moment, this chart is covering from August to present. Yes? Well, let's scroll out a little bit. Now we're back to June. Now we're back to April. Now we're back to February. And now we are back to only the start of 2018. And we see limited supply and extraordinary demand. But in time, we see increasing supply with incredible growth in volume and falling demand. You can see dilution on your chart. You can literally draw dilution on your chart. How about that? Demand, supply, dilution. You did it. Maybe you already did it. and you're saying, can I move on? Well, it's my video. There is dilution. Hey, Pat, this float is old. What? How can I calculate what the current float is? The calculation is simple. Outstanding shares subtracted by restricted shares equals your current float. If this is old, don't you worry about a thing, because that is current and up to date. You did it. What if there is no float information? And what if there is no restricted information? And what if there is no unrestricted information? All I know are the amount of shares that are floating out there. Well, you don't get to know the float. So for safety's sake, and as a general guideline, you are now treating your OS as your float. But why is it even important? Float. Float, float, float. I'll tell you why it's important. When we enter a stock, we need to know if there's upside. We need to know if that my entering on this day, at this time, with this catalyst, whatever it may be, we need to know if it's powerful enough to provide me with upside. Is the catalyst enough to move the stock? So how do we do it? Well, let's get a flow chart, and we're going to look at our flow chart again and build it into the steps. There's your steps. Look here. So we have removed a bag here. We are now here. And the next step is to calculate the float multiplied by the price per share. Well, why are we doing that? Let's do it here. The current price per share of 0.07 multiplied by 900, I'm going to round it down, okay, 961 million would say to you that for you to buy up all the shares of BYOC at this price, it would cost you $67 million. So you need to ask yourself, is any disclosure that comes out or news that comes out on something with a float this high at such a high price enough to provide me with upside soon? Well, is 67 million a lot? Is $67 million enough? Is that high? Is it low? What is it? Well, and we'll get into it. We're going to go all the way today. I got time. Your new measure of volume is now money volume. Share volume, forget it. It's done. This volume, look, this has high volume, does it not? 4 million on the day. Well, guess what? That 5 million shares is only worth 485 bucks. Now, I don't know about you, but that doesn't sound like people are putting real skin in the game. This has a lot of volume, 70 million shares. But it's only 7,000 bucks. Is that really something that is of interest to the market? A market that did $1.7 billion on Friday? Is 7,000 bucks truly something that's of interest? Nah. If you're watching this on the first half of 2018, this run will never be forgotten. 50 cents to $45 in 2 days. And that amount of momentum and excitement brought in $1 million one day and $2 million the day before. It brought 7,000% gain in 2 days. And something that exciting is bringing in $1 to $3 million a day. Therefore, $67 million to buy up that float is a lot of money. And you may not find the stock you're entering at that price very compelling. And we can see it on the chart. That once upon a time, that billion shares was very, very nice, sub penny. Even nice around a penny, or 2 or 3. And we could see, according to our information, that the float on this stock was much, much lower back then. So it was moving at a great rate. But as it's picked up steam and people are holding it relatively strongly, as evidenced by the volume, it just can't seem to get any momentum at this price, because this price per share on a float that large, $67 million to move it, it's too high. So buying it, looking for a massive move up, especially intraday, in a day, would be probably not the best plan. I make this calculation to imagine how much it would cost to buy the whole thing. And imagine that if the market suddenly got really excited about it and bought a ton of it, boom, 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 would it be enough to begin turning this float over once, twice, 3 times a day? It's a general measurement and a guideline to help you understand if something is far too heavy on the share structure, recently diluted or not, to see upside for yourself. Let's contrast that with SECI. We don't have a current number, but I would say based on the way this traded was accurate. So on Wednesday, September, what's the date? 19th. Wednesday, September 19th, 291,114 shares multiplied by 0.5 meant that it only took $145,000 to buy that float and flip it into new traders' hands. And then with little over $2 million on the day, $2.5 million, it turned over once, twice, 3 times, 4 times, many, many times, to lead to almost 800% gain the Thursday and another 253% the next day. From here on in, this moment now, everything you see, do, say, smell, I don't know if you smell stock, smell, with regard to a stock must be based on share structure. And every time you look at it, No matter how exciting the news is, no matter who's talking about it, tweeting about it, is what they're saying strong enough, exciting enough to turn it over? In the case of SECI, it was. In the case of BYOC, at this price, maybe not. So that's what it's all about. You're looking for dilution. You are looking for share structure, because nothing matters if there are too many shares in existence. It doesn't move. Look at the share structure and calculate the float times the PPS. Is the catalyst strong enough to drive a stock? No. Stop. So we have now provided ourselves two opportunities to walk away. They're gone. Let's say yes. Look at the share structure, the float multiplied by the PPS. Is the catalyst enough to drive the stock? In the case of SECI, yes, it was. They had a big lawsuit with a large company, and the court date was supposed to be Thursday. And they were in line to win millions and millions of dollars, and the market was very excited about it. Is the catalyst strong enough to drive the stock? I would say yes. But how do I know if I'm late? This is where we get into charts, and you'll find there's a great video I have there. It's called The Charting Video. And if you're tired of watching chart videos that don't make any sense, like I was, this will make it better for you. Because I didn't know. People were saying things and they weren't even English. Let's roll the tape back. Let's roll it back so I can see the date. Tuesday the 18th. We saw it down at that 0.3 almost. And then the next day, getting closer to that court date, we saw entries in the 1, 2, 3 range. Well, in this case, the court date was the next date. So this anticipatory buying may have been an all right entry. Now the court date has been postponed until 2 weeks from today. So if I was just hearing SECI for the first time, maybe here is not the place to buy, considering there have been entries as low as half a buck. Are you early? Are you semi-early? No. Stop. You need to get on your work with charts, which we do it all, to find a good entry. It is not time to just buy a bunch off the ask. Good. Now, one of the things I like to do, and some people have argued with me, they can have an argument if they want, I don't know, whatever they want to do. One of the things I like to do is a game. It's a game called Up or Down. And I don't know if you've ever played it. Here's how the game is played. Up, this isn't the whole game, or down. Yeah, up or down. Thanks, Pat. So let's play a game. If someone said to me, how about this? We'll play a real game. It's a game called Baggy Home Invader. I don't know if you ever heard of it. Here's the game. Close your eyes and just sit back and imagine it's Friday night, and you're alone. No kids, no whatever you got. You've got a moment. You have a moment. And it's kind of chilly outside and you're really relaxed on the couch. And then you hear boom, someone crashes right through your front door. And they grab you in a headlock. And they put a piece of paper in front of your face. And it's this. And I said, I'm from the future. And I know what's going to happen in the future. I'm going to show you something. You didn't ask for this, but I'm here now. This is what I do. And I'm going to show you something. And I'm going to ask you, in the future, based on this chart, do you think this will go up or continue to go down? And if you get it wrong, you lose your life. For your life. What's your best bet? And you say, down, and the home invader releases you and storms off into the night and fixes your door on the way out. And you realize that the home invader is a force for good. That this home invader has scrolled out a chart for you and provided you a trend and even a view of volume to let you know that your upside on this opportunity is very limited and very short term at best. And once you stop shaking and you have a moment to collect yourself, you realize that that home invader was not evil at all, but a force for good. And you now know that your trading decision on whatever this is and your entry and exit will be very, very short-lived because it only goes one way. This person lost, this person lost, this person lost. This person lost, this person lost, this person lost. This person did all right. Loser, 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 loser. See it? Loser. Okay? Up or down. And that's going to allow you to decide as to whether or not you have an opportunity for a profitable trade. Within the down time, there have been profitable trades, but they have been short-lived. 2 days. Not even a full day. 2 days. 2 days. 2 days if you like to earn 2 ticks. A day, a day, a day. As you enter the danger zone, the dilution zone, your opportunities get shorter and shorter and shorter. And now that you have taken this course and you are part of what we do here, you see it and you know. And you look back at those who hold things with charts like this long term, who are going around analyzing the news and looking for information in old articles or chatting with other people holding it long term, looking for thoughts. You're gone. You've left. Our goal is to remain liquid So when the SECIs of the world come to us and we run our steps, we are ready. We are not saying, well, I'm waiting on the cure for canine sarcoma right now. This 50 cents to $48, pretty darn good, but I'm waiting on this. No more waiting. The baggy home invader has showed you that there's nothing worth waiting for here. Well, could it go up? Sure it could. Let's go back. Now we're a time traveler. Let's go back to March of 2016. And it had a great run all the way to almost a penny. Drop way down, one more bump. But if we go back more and more and more, we can see the scale of the dilution and the lack of price movement. Must have had a heck of a run here. No, this is what's called a reverse split. And if you do not know a reverse split, now's your time. If you've ever asked yourself, what is a reverse split? Here it is. You will never need to ask again. On the day of a reverse split, let's say the ratio is 100 to 1. Nice drawings. The ratio is 100 to 1. Prior to the day of the reverse split, you were holding 100 shares. And the day after the reverse split, your 100 shares are 1. Why do they do this? Because they need... Can I see it? Can I see anything? Guess not. You know, you think you're organized sometimes. Obviously, you're not. Their goal in doing this is because now the float has become too big. And traders like me, savvy traders like you now, are saying, well, shoot, there's so many damn shares out there. How the hell is there any upside for me? They know it. So what do? A reverse split. So now what they've done is taken, okay. They've taken 961 million shares and divided them by 100. Not 1,000, no sir. 100. So now the float is 961,000. And it is once again light and able to move. But my gosh, they did it again. They did it again. It's the cycle continues, if you will. They did it again. So based on the history of this stock and what they do with the PPS and the dilution is you hold till that final slap in the face of dumping. And then comes that reverse split. And all the people who lost their ass and quit trading and said penny stocks are a pump and dump and they're a scam and I'm out. All the people who lost everything they invested here now get one share. And savvy traders like me who've been around and like you now, because you're going to be around, I promise you this, you're here and you're here to stay now. Remember what they did last time. And they go, because if I hold this for any period of time, I lose. So a reverse split is never attractive to investors because they need more room to start diluting again. And they need to attract a whole new group of traders to their stock that see that it makes big moves. And wow, this makes big moves. I think it can make a big move longer term. But the ghosts of the past are still holding. And once they're bought out, and this period of time is usually them dumping out, once they're bought out, then we can go back to a stock that nobody remembers. Okay? That is called up or down. And some people argue that it could be here or here. And maybe it could, but make up or down part of your life. And if you start feeling yourself getting technical, ask the question, if you were to put your life on the line and the wrong answer meant death, based on the trend, you come up with a pretty good answer, and it's usually the right one. That is another step. And that down has now saved you, again, from buying a bag, or at least holding a bag. If you want to try and get slip. You want to try and slip? If you want to try and get slick with the news and buying momentum and doing all that, we've got you covered. We got tools. We even have a proprietary indicator that we've worked hard to create that can now be yours. And it works damn good intraday in the OTC. I would challenge you to find a better one. Is the chart up or down? Down? Well, let's proceed with caution. And that's why that's yellow. Thank you, Eric. Brilliant. And that's why that's yellow. Up? Well, now is the time, and you can see so far, at no point has social media sentiment affected my decision. And you will learn with me how to correctly read news, how to find out if news is bullshit, and how to understand filings and spot things like mergers, acquisitions, all sorts of exciting things. The juice is here. The gains are here. This is when you get into that intraday action. And we've got it all. Next step, up. Well, I suppose it's time to check social media. There's a guy. I've never seen that person before. Okay. Now's the time to check social media. Why are we checking social media? If the catalyst is tight, if the chart is bottom, and you know the catalyst is tight, and the chart is bottomed, and the share structure is excellent, and it checks out as being a current filer, or an active on its SOS with a new filing or a new piece of news, and you go on here and no one's talking about it, it's because they're all trying to get it. Every tweeter, every iHub poster is a seller. Seller, 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 seller. So as you, seller, seller. As you work your way through it, seller, 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 seller. As you work your way through, you begin to calculate how many people you got to buy off. Can I see anything? I guess not. You need to buy off the ask to see upside. They're already in. So now I got to get into my chart work. If it's good, and you will know the more time you spend with us. If it's good, you'll know. And if the answer is no, time to grab some shares, baby. It's time to, what? No, that's not how I wanted it. It's time to grab some shares, baby. It is time. Yes. 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 No. Bing. Let's go again. Yes. 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 Up. Yes. No one in yet? Boom. Yes, 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 yes. Stop and think about it. Let's look for entry on the chart. Are there current disclosures on OTC markets? No. Is there a reinstatement? No. Stop. Are there disclosures on OTC markets? Yes. Look at the share structure. Is the catalyst strong enough? Hey, hey guys, we just signed a contract for $50,000, but it costs $50 million to buy up our whole float, and our price is at an all-time high. Is the catalyst strong enough to drive the stock? No. Stop. Yes. Catalyst strong enough to drive the stock with a buying volume of $1 to $3 million at maximum? Yes. Let's check the chart. Where are we at? Are they active, recently active on their SOS website? Yes. Let's calculate it. Let's check the chart, see where we're at. Each step provides you with the opportunity to get in or get out. The final step helps you calculate how late you are in relation to your chart. These are the importance. This is the importance of the steps. And this is what is going to allow you to finally free yourself from hearing and move to seeing upside and letting things go. And we do a ton of stuff, exercises on how to get on the ask. Get your ass on the ask is literally the turn of phrase. I just made it. How to work a chart for real with a human being explaining it to you. How to read news and read between the lines. How to understand merger filings. It's all here for you. But this is the solid ground on which you stand. Every thought you have from here on in is about share structure. Because in the OTC there is not a ton of volume. So you need to know that if volume comes to what you're in, you got a fighting chance. That's what it's all about. And along the way, no, why don't I use it? Why don't I use a mouse? Along the way, you've got relief valves to stop you from making a bad decision, and you have opportunities to proceed with caution. These are the steps. You can find the steps here, right in the pinned messages. They're waiting for you, including the steps on paper to put on your desk, including the flow chart including information about market makers, including me explaining how to see videos, including all sorts of interesting things. Like what is a forward split versus an AS raise? They're all here for you in the pinned messages. So welcome aboard, and welcome to finally making a buck in the most painful market of all. It just got easy. Believe it. Believe me. You don't have to believe me. Don't believe me now, actually. See what happens. All right. Have a good evening. Thank you.